Lock up your women and children. It is time for Bullish Money Unfiltered. I don't know what's going on with people. I think the recent market collapse, the crisis that is going on in global financial markets, I think it's caused a lot of people to literally lose their minds. People are suffering brain damage, and you know what? Such people, you can't help them. You really can't help them. I mean, we are on the precipice of some major shit that is just about to implode. There's going to be a diarrhea of just total pandemonium that is just going to just guzzle out and just rip through every sector of society. And, people are just, walking around to like, oh, yeah, it's fine. The Dow Jones just lost 1,000 points during intraday trading, and that's fine, whatever. It's like, it lost 1,000 points. We had like a mini crash going on. I mean, a mini flash crash. It was like, boom, boom, it's gone. Like, $1 trillion, boom. And people were like, I'm just gonna go to work and let's punch my time card. Nothing to worry about. But you know what? You really can't blame the general public for not really caring about these about current events, because take a look at this Yahoo Finance article, 5 reasons to stay calm as the stock market quakes. It's quaking. All right, let's go through the bullet points here. Number 1, according to Rick Newman, this is nothing like the 2008 crash. The economic situation back then was awful, and the stock market crash in the fall of 2008 would have kicked off a full-blown depression if not for aggressive government intervention. Yeah, it's nothing like 2008 because it's worse. The one thing, and it's funny because in the first sentence, you've already given, you think you've given an argument for your position, but in fact, you've given yourself a counter argument. So you just negated your own argument here. Because you can talk all you want about China and, the crude oil markets. Yes, those factors are very important. But the reason why I say the 2008 crash, or excuse me, the 2015 crash, the current crash that we're in, is much worse than the 2008 crash is because our government, our central bank, doesn't have the kind of weapons that it used to have. Because when 2008 happened, this was pretty much fresh in fresh in everybody's minds. I mean, we've never suffered a crisis like this in modern history. And so when it happened, at least on paper, the economy was much stronger. And therefore, the Fed had the weapons to, drive down interest rates and to deploy aggressive monetary policy. But those weapons have been deployed. You can't fire missiles that have already been shot off. Unless you know some way to suddenly materialize weapons that you've already fired. I mean, you've already fired your last bullet. So now you're saying, well, we got some extra bullets. Like, where did those extra bullets come from? We don't have any extra bullets. And then not only that, but this time it's a lot worse because, again, when you look at the Asian markets, I mean, my goodness, they took a dump over the weekend. And, the latest news suggests that they're taking a dump right now. So, watch the Dow futures and watch the S&P futures, because I think we're just getting started, baby. We are just getting started. So you're making this argument right now that it's nothing like the 2008 crash. Talk to me in a few months from now, and we'll see how your sentiment is from that point. Second point that this author makes, the U.S. economy is looking good. It's kind of hard to read that with a straight face, but let's try. It's not growing as rapidly as it did in the past, but it's still growing. Employers have added nearly 1.5 million new jobs this year alone. And 11.6 million during the last 5 years. I mean, first of all, these are not jobs, these are fucking Walmart jobs, I mean, it's like, you see, there's no contextual basis here for rationality. I mean, you're comparing engineering jobs and sales and business jobs that have just been evaporated, and then you're replacing it with seasonal labor, Walmart, McDonald's jobs. I mean, yeah, on a nominal basis, yes, jobs have increased, but on a qualitative basis, they have not. And you can just look at real wages, and it shows you exactly what the problem is with the economy. So, I mean, the fact that they keep harping this nonsense, I don't even know where to begin with. Okay, and the author goes on to say that consumers are spending more, the housing market is finally improving, and auto sales are on pace for the strongest year ever. I'm not going to really speak about the auto sales because, let's face it, I mean, buying a car, it's, with the loaning options that are available today, buying a car isn't really that big of a deal. But I want to go back to this housing market is finally improving. That's a bunch of bullshit. And it's a bunch of bullshit because, once again, we have the government providing you with a bunch of bullshit reasons, bullshit data, and trying to mix and match arbitrarily what's going on here to make it look like the housing market is improving. Okay, so the thing is that people say, these pundits say that the housing market is improving because housing starts and the home builders index is improving. And that's a fact. The home builders index is improving. Housing starts are improving as well, at least from against the prior time frame. But the thing is that housing starts and home builder sentiment, those are supply side dynamics. Okay, I mean, those are, of course, the home builders index is going to go up because you have home builders like D.R. Horton that are going to just start, pumping the real estate market on the supply side because they are the suppliers of real estate. But the issue is not housing starts and home builder sentiment, because the sentiment on the supply side will always outpace. The important point here is the demand side. What are regular folks like you and me, what are regular folks buying? That's the demand side of the real estate equation. And the demand side is completely out of whack. Completely out of whack. And you can look at this by looking at the shares, if they're publicly traded, shares of home builder companies like the aforementioned D.R. Horton. When you look at the average performance of D.R. Horton shares versus housing sales, not housing starts, housing sales, the home builder stocks are rapidly outpacing the housing sales. For example, D.R. Horton, even now with the market sell-off, with the broad market sell-off, D.R. Horton shares are within 20% of its all-time highs. Whereas the housing sales, at least in the housing sales of new homes in the United States, they are nowhere near their all-time highs. Because back when the housing market was in that bubble mode, we had more than a million new homes being sold at its peak. Right now, the average is less than 500,000. Okay, so we are nowhere near the all-time highs for housing sales, but we are very close to all-time highs for home builder stocks, home builder equity valuations. Now, what does that tell you? Again, it tells you that the home builder sentiment will always outpace housing sales. And that's not a good sign because, obviously you want some outpacing. Obviously there is going to be by default some outpacing on the supply side, but you never want the supply side to be that much out of whack with the demand side. There has to be at least some, it can't be completely divergent. There can't be a totally dichotomous relationship between the trajectory. Wait, what? All right. Who the hell is calling me? Yeah, let me take this call. Hello? Hello?
Hello, this is Yolanda. Hello, this is Yolanda calling on behalf of the Public Opinion Research Company.
Yes.
To Joshua?
Yes, I'm very busy right now. I'm going to need you to call me back tomorrow around the same time.
No problem. Have a nice night.
All right, thank you. Sorry about that. Lesson number 1 in radio broadcast, keep your cell phone turned off. Okay, so, but where was I? So we're talking about the housing market. Again, home builder sentiment is rapidly outpacing the housing sales. And so supply side is rapidly outpacing demand side. There's just a total divergence between these two metrics, and it's not sustainable. That's the whole point. It's not sustainable. I wish it was. That'll be good for the economy, but it's not. Let's just use some common sense here. When supply side is rapidly outpacing demand, it's never a good thing. All right, let's get to the third point, which is stocks are still up sharply over the last 6 years. The bull market rally began in March of 2009. The S&P 500 is still up 187% since then, a huge rally. In that context, the 8% decline we've seen this year is a tiny squiggle on an otherwise upward line. Okay, this is where people use arbitrary mathematics and are depending upon the numerical illiteracy of the general public to deceive you. I don't like this because it's assuming falsely that you bought a majority of your positions in the early portions of the bull market, and now that you see an 8% decline, that, hey, it's not such a big deal. Yeah, of course, if you had bought majority of your positions, say back in 2010, 2011, and then you just didn't buy any more since then, yeah, the 8% wouldn't be such a big deal. But that's not how investment works, is it? Because especially, a majority of these funds are retirement funds. And so what they have, what you have going on is you have people saving on a bi-weekly basis or however often they're paid. They're just on a regular and consistent basis buying a certain amount of shares in the stock market. And so yes, they bought some shares back in 2010, 2011, but they were still buying the same amount of shares, if not more, in 2014 and 2015. So in a way that you're dollar cost averaging on the way up. So when you take that 8% loss, it's a lot more painful than people realize, because you've been buying throughout this whole period. If you have a 401k, a typical 401k plan, you've been buying at the bottom, but you've also been buying at the very, very top, at the record top. So taking that 8% is a lot more painful than you realize, because most people were not, hoarding in 2010, 2011, and then selling right now. They're not doing that. They were buying throughout the whole period, and they probably bought more as the markets were rising, starting from 2013. And the reason why, of course, it just has to do with human psychology. Most people, they're not going to be buying at depressed levels. They're kind of, if anything, they're tiptoeing their way during these depressed levels. And as soon as the broader markets start to lift higher and higher, then they get more confidence and they start buying. And then as the markets go even higher and higher and higher, then they get even more confidence and they just start pounding more. So in fact, most people, when you look at general human psychology, I'm not talking about individual people, I'm just talking about general human psychology. Most people are buying at the highs of 2014 and 2015 and buying less in 2010, 2011. So that 8% decline that you referenced, which I guarantee is going to be a lot worse than that. But anyways, for right now, that 8% decline, that actually hurts a lot more than this article is suggesting. And it has a lot to do with using double speak and depending upon the general public's numerical illiteracy. Now let's get to the fourth point. The Fed can step in if things get really bad. Well, yes, they can step in. And I think I read an article somewhere that says that if the S&P loses a certain threshold, something like 6-7% or something, that the Fed will, the Plunge protection team will come in and save the day. So yes, that is technically true. But here's the thing. I mean, let's be honest here. The Fed pretty much created this mess, and I'm just going to give a moral counter argument here. The Fed created this mess. So why then? Why then does the Fed suddenly get to be the moral arbiter of this circumstance? A circumstance that they set in place. I mean, it doesn't profit me anything. That's the thing. I mean. People only look at the Fed, people praise the Fed when they do something good. When they say, oh, Ben Bernanke, he saved the day because he had the courage to, pump up the economy with artificial liquidity. He was very brave. Well, the thing is, though, that the Fed ultimately caused that situation where such a drastic action was essentially necessitated. I mean, you're not profiting me anything because you caused the problem and then you solved the problem. So the net profit is zero. It's not like you had a solution that was independent of any problems that you yourself caused. You didn't just create wealth. You caused wealth to be seriously compromised, and then you came in with your compromise solution. So really, the net result to me and to the rest of us is nothing. So I don't really like this argument. I could get technical with this argument, but I think I just want to make a moral counter argument here about the Fed. They caused the problems, and now they're coming in to fix it. Well, in my books, that's bullshit. That's total bullshit. Finally, bargains will materialize. Of course, this is the buy on the dips argument that the mainstream uses to demonize precious metal investors. But then when shit goes wrong in the stock market, then they take that argument that they used as a weapon, as an offensive weapon, and then they use it as a defensive weapon. Which it just shows you, for one thing, the inconsistency and the flip-flopping that goes on Wall Street. Because guaranteed that if the market suddenly if the Dow gained 2,000 points tomorrow, then this article will probably be taken down and be like, "Hey, I told you everything's cool." I mean, but no. The thing is, bargains will materialize. Well, I guess that depends on what you mean by bargain. I mean, you can easily say bargains will materialize if you know in fact that the sell-off is over. But as we can see right now from the Asian markets, the sell-off is clearly not over. I mean, the Asian markets took a dump yesterday, and they're taking a dump right now. So where else would the markets go? Where else will the U.S. markets go when they come online tomorrow and for the rest of the week? I mean, where do you see the good news? I mean, where the bargains will only be bargains if there's actually a fundamental reason to be bullish right now, and there's no fundamental reason to be bullish, other than to say that maybe there's some dumb money out there that's just willing to buoy the markets for some time being. Other than that crazy speculative argument, there's really no fundamental reason to come in here, because people just have this assumption that, well, if we lose so much in the stock markets, then there's only one way but up. That's not necessarily true. I mean, if you really think about it, bear markets are the most vicious, not because of the length of time that the markets go into a bearish cycle. It's because that first hit is so quick, but is so devastating. So you don't even want to think about the markets tomorrow. In fact, you don't even want to think about the markets for the rest of this month. You really don't. And probably not for the next month as well. I mean, some of you guys may know about the Shemitah cycle. I've done some videos about it. I think the statistical evidence, a little bit inconclusive, but when you have this stuff going on, all the fundamental technical reasons why the markets are going to collapse even further from here, and then you got the religious argument about the Shemitah and the uncanny coincidences, the uncanny ability for the Shemitah to be used as an indicator for future bearishness in the financial markets, particularly in modern times and during the post-World War II era. All you can really do is just take all the evidence out there, the objective evidence, the subjective evidence, and any other factors, whether they appear conspiratorial or not, and you just got to look and just stack the evidence. Stack the evidence, what's the bullish argument, and stack the evidence, what's the bearish argument. And I, for one, right now, I can't really think of a good bullish argument other than to say that this is a trading opportunity, that there might be some dumb money that will just come in for, a quick swing trade, open a position and then close a position on the same day. Other than some kind of wicked speculation that nobody really can foresee, other than that, I don't have a good fundamental reason to be bullish in the markets. And especially with all these articles saying, hey, calm down, everything's cool, everything is just fine, blah, 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 blah. I mean, I don't know about you, but I mean, I'm glad. I'm really, really glad I got out of this shit. And, I'll just end it on this. We are on the right side of history. Because I really do believe, and I'm going to do more videos about this, but I really do believe when you look at the granular details of the markets, when you look at the mathematical evidence, and I love the mathematical evidence because it's undeniable. When you look at this evidence, you can't help but think that we are literally facing a paradigm shifting events in the markets, just like you'll never forget where you were on September 11th, 2001. I don't think you'll ever forget where you were for the month of August 2015. I really think that this is one of those I don't even have the words to describe it. It's just an earth-shattering event. It's not a quake like this article is suggesting. No, this is something where the earth opens up and swallows entire states whole. That is the enormity of magnitude that we're facing right now. And don't let anybody else tell you otherwise. I'm just giving you some good material here in terms of countering these idiots on the mainstream. I lamented the fact that, why am I not on the mainstream in that famous ranting video that's gotten over 11,000 viewers. Thank you very, very much. I lamented it, but at the same time, I'm so glad I'm not there, because I wouldn't be able to share my independent analysis with you guys and really just speak from the heart and speak what I truly believe in. And so I know that if you were in the mainstream, that I mean, especially if you're on the mainstream, such as the Wall Street Journal, the Bloombergs, the CNBCs, that everything that is presented to you is filtered, and if you don't present it the way that they want you to present the data, guess what? You're not working anymore. So I understand why people like this Rick Newman write these articles that they do. I wouldn't blame the individual authors. I would just blame the system. The system wants you to believe that everything is cool, everything is fine, and it's up to you whether you want to trust them or not. I mean, clearly I don't. And I don't think that's a very good idea. And I've been warning people, hey, get out, get out, get out, get out, get out. So that's all I can say. I mean, at the end of the day, all you can do is just put your best foot forward. Share with the people that you love about this coming crisis. I mean, we're living in crisis mode right now. We're living in crisis mode. So, don't despair. Just go out there. Share the good word. Share the word with people that you can still get out. You can still get out of this craziness with a considerable percentage of your retirement funds and in your stocks and other paper assets. You can still get out, and but get out now. I mean, don't. If you're going to do some research into this, subject and, find out if this is a good idea or not, do that. I encourage you to do your research and to verify the things that I'm saying, to verify the things that the mainstream is saying. But ultimately, you got to do this very quickly. I mean, you don't have time, because by the time when it really starts to rain down, right? When it really starts to rain down, your broker is not going to be able to sell your shares at the best price. They're just not, because your broker will be competing with almost every other broker on Wall Street, with all of them hitting the panic button. So when it's just going to be an avalanche. So you want to get out of it before that avalanche strikes. Okay, get out of it while you're profitable. Even if you're not profitable, just get out, because it's going to be a lot worse. It's going to be a lot uglier. So that's my little spiel for today. Hope you guys will subscribe to the Bullish Money YouTube channel if you have not already, and look forward to some more videos. Of course, I'll do some more of these, off the cuff, unfiltered videos. But I also have a lot of well thought out, well produced videos in mind, and I think I'm going to produce content that's just not readily available on both the mainstream and in social media. So you guys can look forward to that over the next few weeks. And until then, we'll see you next time.